Welcome to the RideShare Guy podcast, where you will learn about the rideshare and mobility industry straight from Harry Campbell, who's got over 5 years experience covering the industry and has talked to thousands of drivers. There's no better place to stay up to date, entertained, and educated. So let's dive in.
All right. So before starting Stable, Doug spent time in finance as a technology-focused attorney, crypto mining, and growing a fleet of rideshare vehicles. He's even spent a fair time amount of doing rideshare himself. He's a self-taught coder. Doug's interests focus on areas of the economy heavily affected by regulation, yet in dire need of innovation. So I feel like insurance is a good place to start. How you doing, Doug?
Hi, how you doing, Harry?
Man, I'm learning stuff about you. I didn't know that you were I knew about the attorney part. I knew about the fleet of rideshare vehicles. I guess I didn't know that you dabbled in crypto too, but I mean, who doesn't these days, right?
That's right. I will say we were my brother and I were early adopters, but we do still have some of that infrastructure. Whole other conversation we could have on that.
Very cool. Well, I'm probably not the right person to interview you about crypto because I don't know much about that, but I do know a thing or two about rideshare. And I'm really excited to have you on today to chat about Stable and the new rideshare insurance that you guys are going to be launching. But I think you have a really unique story. And I actually really love the arc of your career because, sort of as I teased in your bio, you kind of actually got started on the fleet owner side. So tell us a little bit about your background and your history and kind of how you made your way into the world of, rideshare insurance.
Yeah, it took me a long time to figure out what I wanted to do in life. So I dabbled in finance, worked at a startup. Actually, the great part of that early on in my career is where I met my first co-founder, Stephen Decker. So him and I are working together now 15 years later from when we started. Became an attorney, kind of focused on really, I think at the time is wherever I could get a job. And so I kind of taught myself some low-level engineering stuff in law school, and then used that to get a position in-house at a company called Mercer, which is it's a company owned by Marsh McLennan, which is a large insurance broker. So kind of was in the insurance space, but I wasn't an insurance practitioner. I knew very little about insurance. My job was really doing kind of intellectual property contracts, data security agreements, business contracts, things like that. So did that for about 5 years. And during, I think within the first year of becoming an attorney, I was like, this is not what I want to do with the rest of my life. And so I was starting to figure out what the next thing for me was, and kind of wanted to generate some side income. And I was an early user of Uber in New York City, lived here since 2008.
When did you take your first ride? Do you happen to remember?
It was 2011. I remember It was at the time it was Uber Black, right? Or it was just Uber or Uber Cab, I think. It was.
Well, I always like to think, when people tell me about when they first heard about Uber, right? Because it's 2011. That was pretty. I feel like it might have just been Uber Black in New York City, maybe SF, maybe LA, right? That was pretty early.
Yeah. So in 2012, whenever they first came to the city. Because I remember what happened was I had some friends over and I just heard about Uber and, we got this massive black SUV to come pick us up. And they were like, wow, this is like, you must be doing very well. I was like, no, there's all these discounts going on right now. I think it's like $20 for a ride.
All in.
And then Uber, proliferated throughout the city. I would take it a lot, use instead of the subway. Then UberX came around and just made transportation much easier in the city. So I'd speak with a lot of these drivers, and one complaint that I consistently heard was just kind of the lack of availability of vehicles. So it's very expensive in New York City to get a vehicle registered, insured, and it's after purchasing it. I think the number one job for a lot of immigrants coming into New York City is to do Uber, or was at that time. And so my friend and I kind of came to this idea of, we thought it was going to be very easy. We have credit, we can go buy these vehicles. Let's put them on the Uber and Lyft network and rent them out. Much easier sounding than actual in practice. Being a fleet manager is very difficult. I think there's a lot of good drivers out there, definitely some that are taking advantage of the system that give the 95, 98% of good drivers a bad name. But so we were trying to do was we wanted to automate a lot of the processes, just make it very easy for a driver to return a vehicle if they wanted to stop work. They bought their own vehicle. We automated a lot of the, taking it in for maintenance or if you were in an accident. And then we were very early adopters of dash cams. We were using Nexar devices in vehicles before they were really widely used in fleets, trying to capture telematics information, things like that. All around trying to give our drivers a better experience and making sure that we weren't going to lose these vehicles that we were purchasing. And we realized that there was a lot of interesting data that we were capturing that could be made available from an insurance perspective. And so it wasn't statistically significant. We had only been operating for a few years. I think what we saw early on was that if we could get this data to our insurer, that we should be able to benefit from it. So we're paying for it. Is there a way that we could capture that value in our insurance premium? And unfortunately, there wasn't. There's just no way that our current insurer at that time could either collect the data from us or put it to use in their underwriting models. That was really, so it was like 2017, we kind of came up with the realization that there was this huge gap in insurance that needed to be solved for. It took us another year or so to figure out that we should be the ones to try and solve for it, because we went out and talked to a bunch of fleets, individual owner operators, and realized that we were not the only ones having that problem. So that's really how Stable was born.
Very cool. That's quite the timeline. I mean, first of all, I'll summarize it quickly and give you a break, because you were doing startups, you were an attorney, you were doing coding, you kind of got into insurance, you met your co-founder at, it sounds like one of these jobs, and then you actually became a fleet owner. And I think you mentioned something interesting too, that not a lot of people outside of New York know, is that New York UberX is really a very atypical market in that you need full commercial insurance, which might be $3,000 to $5,000 a year, plus you need TLC licensing, right? So like you said, you really can't be, someone like me, you sign up on your couch and, do a few rides here and there. You kind of have to do it, 30, 40 hours a week or more. There's a big barrier to entry. So a lot of people, actually go and rent through a fleet owner in New York City. Whereas in basically every other UberX city in the US, it's kind of the opposite, right? Most people, own their own car or lease it or something like that.
Exactly. Yeah, I think New York is very atypical when it comes to how rideshare is done in the U.S.
Yeah. And so, when we first met and started chatting, I think what really resonated was kind of what you hinted at early on, the dash cams and the telematics, right? There is a lot of technology that frankly is like 10 years old that's been around for a long. This isn't like brand new technology. It's like been around for a long time, yet you're not really rewarded for it as a driver, as an Uber or Lyft driver. You're kind of, I almost would argue, you're incentivized to do the opposite, right? You're incentivized to drive as quickly as you can, to drive, the most dangerous times, right? And so I imagine that, when it comes to insurance, it's kind of a shitty feeling, right? To be able to there's nothing you can do. Talk a little bit about what is, how important is insurance? Is it just the cost is so high as a fleet owner, or, what are the opportunities that you saw from the fleet owner side there?
Yeah, well, I think, whether it's fleet owners or individual owner operators, like to your point, a lot of people were putting devices in their vehicles from a personal protection standpoint or an asset protection standpoint that really had nothing to do with proving like I was in an accident or not. It's like my car was stolen, or hey, it's great that I have this video evidence, but a lot of the times insurers won't even take, you beg them to take this insurance or this video evidence, and maybe they would take it from you, but you never knew if it was being used. You still might end up in the same bad position you were going to end up anyway. And there was definitely no discount being given, no like premium reduction or like incentive for us to use this technology in our vehicles. Even if we were realizing the value of it, it seems like it took a while for insurance companies to realize the value. And even then, sometimes you could tell that it was just lip service that they were paying. They're like, great, well, sometimes they would give out a discount and it would be meaningful, but I think like in New York, it started at 10% discount, and then it went down to 5%. And I don't really blame those insurers. It's just like for the most part, they had no way to collect that data and make it useful for them. And so that was really where the gap was. And in fact, we became a broker for our old insurance company that insured the fleet, with the intent of like trying to package this data together and make it useful for them, so they didn't have to go through that whole process of collecting and then utilizing. They could get a score from us, or they could get a report from us that would then benefit their customers, their policyholders. Fortunately, it just never really worked out. There's a lot of other issues in there. So we realized we really just had to like start from scratch and build our own insurance product as our own like pseudo insurance company.
Very cool. Well, I think that's the buildup. So now tell us about Stable and what's the 30, 60-second pitch for the company. Why'd you start it? And, what's it doing?
Yeah, so Stable was really born out of solving our own problem on the fleet side. And like I said, then we realized that it wasn't just fleets having this problem, it was individual owner operators and really any other type of mobility that was newly being created kind of like on these platforms, whether it's delivery, car share, both things that we look at. It's just like trying to make use of this data and make it meaningful and create value for those policyholders. So we started with RideShare. It's what we knew best. We spent the last 4 years really either acting as a broker or going out and trying to build our own product. So spending that time speaking to customers, rideshare drivers, rideshare fleet owners, and understanding the specific problems that they had, and said, hey, like, if you could have any feature out of an insurance policy, what would those be? And then kind of collated those together and found a reinsurer that was willing to bet on us and say, yes, we think you guys know the market best. We're going to give you basically this book and allow you to create an insurance product off of it. So that's what we've done. We're launching in Illinois in a few weeks here with an individual owner rideshare product. Shortly to be followed up by a fleet product. And yeah, we're excited to get it out to the market. We've been speaking to drivers over the last 6 months or so about all the features, and we're getting really good feedback on kind of what we've created, which we're excited about.
Very cool. Very cool. So a couple quick clarifying questions for the non-insurance experts in the audience. Hint, me. So you mentioned a couple terms, broker, reinsurer. So Stable was operating as a broker. What do you guys call yourself now? What type of company is it? And talk a little bit real briefly, like what does a reinsurer do in your context?
Sure. Yeah. So we are what's known as a managing general agent, MGA for shorthand. Typically, that's the way a lot of insurtechs have launched. So companies that maybe listeners do know about, Lemonade, Hippo, Root, those all were sort of launched under the context of an MGA or through that fashion.
And so the customer would know them. For example, I go to Lemonade and I get a quote for insurance, and I may not know who or what is providing, but I'm going to them for a quote. Basically, that's sort of what an MGA does.
Yes, but they also they create the product, so they build the policy. So the policy language that you'll get, they do the pricing. In some instances, they handle the claims. And so what the reinsurer does is kind of sits behind there. And I mean, this is a very simplistic version of it, but they take on all or the majority of the risk and then pay out claims. But the MGAs have what's called the power of the pen, so we can hold ourselves out as the insurance company. In fact, and that's all of our customers will know Stable as the insurance company, even though there's a company called Resolute Global, great partners of ours, sitting behind there, taking on all the risk. And we work with them, almost on a daily basis to talk about how the insurance book is developing, right? If we're comfortable with the risk that we're taking on, if we're comfortable how we priced it, how distribution's going. So we lean on them for a lot more than just risk capacity, but that's really their main function, is to take on that risk.
Okay, cool. I think that is a pretty clear and simple explanation. So appreciate that. And then you also mentioned, so the product you're launching in Illinois, who specifically is that for? Is that for UberX drivers or Uber Black drivers or anyone and everyone?
Yeah, so UberX primarily. So it's really meant as a replacement for your personal auto policy that you might have right now, whether that's from Progressive or State Farm. And yeah, it's built with the rideshare driver in mind. So we consider ourselves to be a dash cam first company. We saw a lot of benefit in that as a fleet. And where you and I have really connected, and how you've connected with Stable, is like how to incentivize more safety for drivers. We think dash cam is probably the number one thing you can do. I can't think of anything more than you can do to personally protect yourself with an inside view dash cam.
Yeah. Well, Doug, I don't know if you've read my book, but the first thing I recommend is a phone mount. And then the second thing is a dash cam.
Okay. So
but I think phone mount, I would say about 95%, maybe higher, of drivers have a phone mount. But I did get into an Uber the other day in New York City, and the driver had a lot of rides, and he was, he had his phone sitting there in the cup holder, like looking down at it. And I'm like, man, how many rides has this guy given? He never thought to get a phone mount. It's kind of crazy.
Right. Yeah.
Every 10 seconds, he's looking down at his phone. I'm thinking, driving in New York City traffic, that doesn't seem like a great idea.
Those are one of those things where I think that's table stakes now. And so I didn't even think of it. Our hope is 5 years from now, dash cams are table stakes, right? Like the adoption rate is that high. And we do think if we can do anything to incentivize the growth of that, some great companies out there, right? Display Ride, one that Driver, Nexar, all good products, different pros and cons to them. But like, there's really no reason that you shouldn't have a dash cam anymore. And for us, it's like, what we're trying to do is say, hey, like, we have all these benefits of having a dash cam built into the policy, whether it's a discount or deductible waiver. But then also just like trying to we subsidize the cost of it, because there's a huge amount of benefit for insurance companies if you can collect the data that's being spun off of these. And so we're willing to pay for that, for that data. It's still like a really good value for us.
Yeah. Well, so I like that, the way you put it, you're a dash cam first company. So talk a little bit more, like, why are dash cams, sort of the number one tool, it sounds like, for both, Uber and Lyft drivers, but also you as a company? Like, why specifically should a driver have it? And then how does it benefit stable or, improve the premium or, dovetail into the insurance side of things?
Yeah, so there's a number of things, but probably primarily it's the actual dash cam footage, right?
Gotcha.
So I'm in an accident, and there's two huge things that happen or can go wrong with a claim, right? One is probably everybody's front of mind, like, I'm not going to get this covered, or it's not going to go in my favor, and I'm going to have this put against me on my record, and my insurance rates are going to go up. So we can't always stop that from happening, right? If you're at fault, you're at fault.
Right. If you're at fault, the dash cam footage is going to maybe
it's
even
going to
work
go against you.
Yeah.
And so we understand that, and we're like, okay, how can we actually incentivize, even in instances where that is the case, that we're going to get that footage. So that's where we brought a claims guy in, a guy named Dylan Brand. He used to work at James River. Nobody's probably heard of James River, but they were Uber's number one insurer for a very long time, to actual on-platform use. So he's seen, hundreds of thousands of rideshare claims. I don't know if that's the actual number, but a very large number of rideshare claims.
Sounds good.
And his point to us was, when he came in, like, he's like, I want to do one thing that we absolutely have to have done. If you're going to be a dash cam first company, you need to make sure that every single one of our customers has a dash cam. So how can we do that? And his view is like, I would pay, I don't know how much I would pay, but I'd pay at least $1,000 to have video evidence of that claim. I don't care if we're at fault or our driver's at fault or the other driver. I want to be able on day one to know what most likely happened in that claim. And I'll pay up to $1,000 for it. So that's where our idea of this deductible waiver, where it doesn't matter if you're at fault or not, as long as we get that video footage of you being in a claim, and cloud-based dash cams make that nearly impossible not to get that. Then we're gonna waive your entire deductible. And for us, it's like a really good deal, because what we can do then is know with certainty, in a lot of instances, what had happened, know when to say, hey, like, we're gonna settle this, or we're gonna try and resolve this as quickly as possible, or no, we're gonna fight this because we know that our driver wasn't at fault. And the kind of side benefit of all this is, and this is really important for rideshare drivers, whether they realize it or not, is it gets that claim resolved very quickly. So our whole goal from a claims perspective is to get you back on the road earning, with very little cost associated with that. So rather than a 30-day tie-up trying to resolve who's at fault and whether or not the vehicle should be fixed and by whom, we just say, hey, like, that's not our main concern right now. It's really getting this, getting your vehicle fixed as soon as possible, getting you back on the road. We'll handle the rest of that after the fact. And so dash cams allow that whole process to speed up.
Yeah, no, that's a good point, because I think that the most obvious reason, for me as a driver, have a dash cam. Okay, I get into an accident. It's like, who's at fault? And like you said, hey, it could work against me. You guys have a cool feature of your product where actually sounds like I get my deductible waived, for that accident, whether I'm at fault or not, if I turn over the dash cam footage. But also, you mentioned something really important, is getting back on the road. And I think this is something that not a lot of drivers think about until, frankly, it's a little too late, where they get into an accident, right? If you're an Uber or Lyft driver, not a shocker, but you don't think about it. Like, your car is how you make money. So if it's in the shop or you're in an accident, I mean, Uber and Lyft literally won't let you back on the platform until your vehicle is repaired and you get it, sort of inspected and make sure there's no big dents or damage or anything like that. So it's sort of like, hey, you're going to potentially lose out on money from the accident, right? If you're, have to pay a deductible or whatever, unless it's waived with you guys. And then if it takes 1 week, 2 weeks, 4 weeks, right? Big difference between 4 weeks and 1 week's getting back on the road versus, like in a personal auto, they could give you a rental car. You can't use that for Uber and Lyft though, right? So it is a pretty big, difference to get back on the road quickly to have that dash cam footage.
Right. And I think what we saw early on as we started comparing our policy and our features against, let's say, Progressive. I mean, great company. Like, I used to have a Progressive policy, like nothing bad you can really say about them. They are an insurance company, so I'm sure there's something bad you can say. I'm sure there's some bad things, but not like you could say the same bad things about us. I'll throw us in the same, like, we'll level set there.
Yeah.
But I think what we saw was, like, unless that driver that we're speaking to had been in an accident with, let's say, a non-rideshare specific policy, so a personal auto policy with a rideshare rider, they didn't understand how terrible it was. And they're like, why would I ever change from Progressive? And so we've kind of grouped those two customer bases. Like, if you've been in an accident, you get immediately the value that Stable's putting together. If not, it's all kind of like, it's hypothetical to you. Like, okay, like I kind of understand this. And that's a little bit longer of a sales cycle. We're prepared for that. But our low hanging fruit is really people who've had bad claims experiences with non-rideshare specific policies. And trying to like figure out how to work with those types of customers first.
So
sorry, go ahead.
No, that's interesting. So let's talk a little bit more about the actual product. And you mentioned you had some really, you sort of designed the product, the insurance product that you're launching in Illinois based off a lot of these conversations you had with fleet owners and drivers. So at a high level, talk about what is the actual insurance product? What does it cover? Who does it cover? And how does it work?
Yeah, so it covers all of your mandatory insurance needs for whatever state that you're driving in. So Illinois is our first market. So we cover your bodily injury and property damage mandatory coverage limits in those states. So the coverage that you need to get the vehicle registered and continue to be in good standing with the DMV there.
So that's sort of my normally right to drive in Illinois. I would need personal insurance. So you guys take that.
Yep, correct. Yeah. So, and then the other components of that are, so there's also mandatory coverage in Illinois for uninsured motorists. So those are two things. Like if you get a policy through us, you're going to walk away with at least those two coverages. But then we realize there's a lot of optional coverages that some drivers want, some may not care about, or some may need to think about a little bit longer. So the obvious one is kind of that first party cover, right? Your vehicle's in an accident, and we're gonna cover that and get it back on the road and repair it. So that's known as full coverage, right? Comp and collision. And so a lot of drivers, you finance a vehicle, then you have a contractual obligation to get that insurance. Everything else we offer, though, is kind of up to you as a driver, but we see a ton of value in it. And so I kind of talked about one of them a little bit here, which is the if you're in an accident, I think you'd brought it up, right? Right now, it may be completely out of our control with supply chain issues, whether or not you're going to get that part for your Tesla or some vehicle that maybe has been out of stock for a bit or is in large demand. So you may be off the road for 3 weeks, not because it's taken us a long time to resolve the claim, but just we're waiting for that part. So we have a loss of use component that you can add on, and it pays you up to $50 a day. You can use that for whatever you want, right? If you want to go rent another vehicle and start working, great. If you're like, hey, like I make 150, I know I'm only getting a third, but at least all my other expenses are taken care of, and I can kind of do something else part-time. Just like a little bit of a salve, I guess, right? If things are taking longer. So that was
it's like
huge
a nice
thing
emergency plan, basically, right?
Exactly. Yes, we knew drivers were going to want that. Another big thing that the drivers really requested was buying down the deductible on the TNC, right? So like I'm in an accident while doing an Uber or Lyft ride, right? So we cover the non-rideshare part, right? So the technical term is P0, but like it just means like I'm doing personal driving. Like I said, it's what you need to get the vehicle registered in the state. If you're giving a ride or on your way to pick somebody up and you get into an accident, the standard deductible for Uber and Lyft right now is $2,500.
Right.
So
super high. A lot of people are always, unfortunately, like shocked because most personal is 500 to 1,000, right? And so it's like you're driving for Uber and Lyft, these multi-billion-dollar companies. You don't really read the fine print, as you might imagine. You get into an accident, even if the other person's at fault, you're still $2,500 deductible to start, right?
And I mean, it's just unfortunately, like given, a lot of rideshare drivers cannot afford that. And the number of drivers that I've seen just exit rideshare because of that is more than I like to think about. And so what we've done is try to say, hey, like, how can we make this more manageable for you to get that down to that 1,000 or that 500? So we have a TNC, it's called TNC deductible buy down. It's just an optional coverage that you can put in. And again, like really tries to make life a little bit easier should you get in an accident and it is your fault.
Yeah, that's smart. So if I have stable insurance in Illinois where you guys are starting and, I get into an accident, just, period zero, right, would me just be driving around. Obviously you guys would cover me because that's personal driving. But when I start getting into the, period 2 or period 3, when I'm with a passenger, right, Uber and Lyft typically cover that period. It sounds like with you guys, that's the case too, but they have this high deductible. So if I get into an accident with a passenger in the car, normally I'd have to pay $2,500 deductible to Uber or Lyft, but with you guys, I actually have the option. I would now be able to buy that down. So I'd still go through Uber and Lyft's insurance, but you guys would cover some of that $2,500 deductible. It sounds like that's pretty cool.
Exactly. Yeah. Just and again, trying to get you back on the road as quickly as possible.
Yeah. All right, very cool. So we've got the buying down the deductible, the loss of use. So definitely sounds like you're kind of hitting on a lot of the pain points. Anything else around the product that you guys have launched or that you learned from talking to drivers about their issues with insurance?
Yeah, I think what we've seen in general, so we collect a lot of data to make this product
Mm-hmm.
work, which I haven't really gone into, but whether we're collecting data from the dash cams, so the telematic devices in the vehicles, we're also collecting data directly from the platforms themselves, to put into use from an underwriting perspective, but also to understand like when they're off platform versus on. We actually we price heavily on the fact that you are doing a lot of rideshare work, so we calculate that exactly. We know when you're on or off the platform. So when you do a renewal, what we try to do is say, hey, like we think you're going to do this amount of personal driving, and thus adjust accordingly. And sometimes that's quite a substantial saving. So it's really the use of all that data to try and price the policy more in line with the actual risk that's taking place, rather than the old way it's been done for a long time. And this isn't a bad way. It's just with a lack of data, that's why actuaries exist. You're trying to figure data points out from a lack of information. We have all of that data. We may as well use it within our policy. What we've also realized is there's a lot of ancillary benefit we can give to drivers because of all this data we're collecting. So we give out daily earnings reports. We try and collate that across the different platforms that you're working on, just to give you some insight.
Very cool.
We're continuing to improve that product. Profit and loss reports. We try and understand like what kind of vehicle you have, what the gas mileage is, what expenses might be associated with where you are in your part of the country. Just it's not an exact figure, but I think it's our start of trying to offer more of an analytics type value. And our whole goal is to build up more of a suite of services for drivers like this. Again, because of all the data we're collecting, we may as well try and offer these free services that are kind of tangential to what you're working on as a rideshare driver.
Definitely. No, I like a lot of this sort of tangential benefits, as you mentioned, right? If you're already collecting a lot of this data, you can kind of aggregate that for me, help me see how much I'm earning on Uber or Lyft, or compare or contrast. And I'm sure you've got lots of cool stuff in the works around leaderboards and all that, which I know we've chatted about before. So I'm excited to see a lot of that. I guess my last question, about the product itself, who's this product the best for, I guess you would say? It sounds sort of like full-time drivers who are maybe, out there with a personal policy, right? They're kind of paying for a personal policy, but if you're driving full-time for Uber and Lyft, you're never really, they're kind of always covering you. Is that who the ideal person is versus, someone who's like doing 5 or 10 hours a week rideshare and, I don't know, a majority personal driving?
Yeah, definitely. I think that's kind of where we've started. So if you're doing, whether it's a period in your life where you're doing a lot of rideshare work, or just like you've decided upon it as a full-time profession, and definitely not as much delivery. So we're really focused, at least to start with, on kind of like the more period of life full-time drivers. We are working on additional products for more part-time oriented drivers, but really, I think our next goal is to get out in front of fleets. I think fleets are really starting to grow. Part of our thesis is that over time, the cost benefit associated with kind of putting your own personal vehicle on is going to go away as rideshare kind of either gets more expensive, or there's just doesn't grow as quickly, inflation hits, whatever it might be. There's a lot of reasons where even if you only wanted to do it 5 or 10 hours a week, you might rent for that period of time. And part of our insurance product that we've tried to make is to make fleets have the ability to rent out for 1 day. Typically the way it works now is at minimum you can rent for a week, just because of the kind of the insurance part of it, adding you to the vehicle, adding you to the policy. So we've been trying to change that as well. So that's kind of step 2 for us, working with fleets.
Very cool. Well, yeah, no, I think that the fleet angle is interesting. And I guess you're a good person to ask about this, because I feel like, especially before the pandemic, this was one of my theories, is that, because pay was kind of for drivers was kind of getting less and less, right? And so if, let's say you're making $15 an hour as a driver and your expenses are $5 an hour, right? That's 33% of your gross income, right? So it's a big chunk, right? Versus if, now drivers are sort of making more on average in LA, according to Uber, they say drivers are earning $30 an hour, right? Because there's this huge, supply shortage, and drivers are, in high demand right now, right? We've got our top drivers like Sergio routinely earning $50 to $60 an hour. So I think it's very believable. And, so I think like expenses kind of, $5 an hour, $7 an hour, not as big of a deal if you're making $50 an hour, right? But obviously, if you go into that fleet route, you start getting all the network effects of buying vehicles at scale, repairing them, maybe even gas discounts. So what are you thinking about the future of fleets going forward? Because like we said, in New York City, it's almost all fleet owners, but outside, and I guess also around the world, it's a lot of fleet owners too, right? It's really only every city in the US except for New York, where this kind of model of individual owner operator is pretty unique compared to how UberX operates in the rest of the world in New York City.
Well, so it tracks very closely with car ownership levels in different countries.
Right.
So the US is very, I think on average we have more than one car per person.
I think
that's the figure right now.
it's like more than one car per person on average in the US, right? So personal vehicle ownership is very high in the US, especially compared to the rest of the world.
Yeah, so you got to go to a place like Europe or anywhere in Europe, the UK, different parts of Latin and South America. That's not the case, and so fleets make a lot more sense. So I think we're starting to see this transformation in auto ownership, whether it's like different types of leases. There's a lot of different companies that we're working with outside of rideshare or looking at working with are kind of like these co-ownership models, and especially when the vehicles are more expensive. So you get like the EVs involved, and all of a sudden you need like a 6-month lease instead of a 36-month lease just to make the personal finance side of it work. So I think that's going to transform over the next couple of decades. And lead to kind of an increased use in fleets. But there's like a real benefit from renting right away, even if you have your own vehicle. And I think it's like if you're relying on this for full-time income, if you do get into an accident, you're like, even in the best case scenario, so let's say that's stable, we get this down to like a 3 or 4 day claims process. It's still 3 or 4 days that you're off the road. Whereas if you're with a fleet, you can turn that vehicle in right away, and you kind of know that you have this fixed variable cost, right? It's never going to go above X amount per day, regardless if the transmission goes out or the tire blows, whatever it might be.
Yeah. One of the things that I've always loved the idea of renting a vehicle is because that exact reason is that you have a fixed expense. Right now, if you go out and ask a bunch of drivers who own their own vehicle what it costs to operate their car per day, per hour, per mile, you're going to get numbers all under the sun, right? I mean, some people use the IRS amount, which I think is pretty conservative, but then, gas prices are spiking. People, have different financing, right, for their vehicles, and people have different MPG, right? So it kind of spans the gamut of what your vehicle can cost. I mean, we sort of know, for example, like a Toyota Prius, if you got a great financing deal, you can get that cost pretty low. But it does seem like there are some benefits. So are you guys kind of banking on the fact that, maybe more and more drivers will be transitioning to fleets in the US in the future?
Yeah, I think that coupled with the fact that it's just going to be a narrower band of professional drivers that just end up saying, hey, like again, whether this is a period of my life or it's my forever career, it's something that is going to probably be less and less weekend warrior type orientated. I think we're already seeing this with some of the Uber transformation, right? And delivery is a completely different game. So I wouldn't make any estimates on that, but it's just like people doing pure ride share. It's kind of being weighted more and more towards the ones that are doing it over and over and over again. So they're the ones that are kind of first in line for incentives. They're the ones that are kind of getting the higher promotions. And it's less and less the ones that are going like, hey, I'm going to do five trips and I'm going to do that once a month.
Well, there's definitely this concept that we call the power drivers, right? These are the guys and, some gals who are out there sort of doing 30 to 40 hours a week or more. And, they make up about 15 to 20% of the workforce, but they do 50 to 60% of the total trips and total miles on the platform. And like you said, the companies kind of compete pretty, heavily over them on a weekly basis, with Uber Quest, which is a trip-based bonus. You have to select, all right, I'm going to do 60 trips and I'll get a $300 bonus. So they really do compete for those drivers on a week-to-week basis. And I mean, I guess the one thing that these companies have to their advantage is having people like me in there, right? It's kind of that variable supply, right? Like I feel like they're never going to completely want to or get away from the part-timers, because it's just so nice to be able to have a group of drivers that they don't have to pay for their downtime. And if demand gets really high or there's Memorial Day weekend or something, it's like, hey, we're doing bonuses, or hey, that's surge pricing, like come out and drive and we don't have to pay you, for that downtime, but we can pay you a little extra right now and we can meet all this extra demand that we have, right?
Yeah, absolutely. I think you're always going to see these ebbs and flows in the supply of drivers. One of the things that we've looked at, and I think that rideshare is about a decade old now, right?
Yeah.
So like, I think you can say there's now alums of rideshare, and just the market is relatively transient as it is, right? People come in for a period of their life, they might go back out, they might come in again. So the way we look at it is like during that period of time that we actually are offering this policy, you're usually collecting 5 times as much data as you would from you or me as a typical personal driver. And so can we use that to kind of like not turn off the policy, but say, hey, like, we know you're coming back at some point, and it's a huge hassle to kind of go back and forth between insurance policies. So how can we kind of push you off to, more of just a full-on personal auto policy after? So let's say you did 6 months of rideshare work while you were unemployed, or you were working on a side gig, whatever it might have been. And then like to your point, like all of a sudden I get this email, hey, I can make $1,000 if I work over Memorial Day weekend. That's hard to turn down a lot of instances. I get those emails from Lyft right now. I'm like, what am I up to this weekend? I wonder how my wife would feel.
I did a video where Uber offered me, during the pandemic, they're trying to get a bunch of drivers back on, and they offered me $100 for 3 trips. And I said, hey, that sounds like a pretty good deal.
Exactly. Yeah. So I don't think like it's hard to turn those incentives down. So we know that there's always going to kind of be this, like, we call them rideshare alum internally. Like it's people who did that rideshare work for a period of life and then can be incentivized to come back in from time to time.
That's actually interesting, because I feel like one thing that, we hear from a lot, we've got an article that I wrote a while ago, is the top 7 reasons why people quit driving for Uber and Lyft. And, it's not often one thing, right? It's like, oh my God, it's like this one reason. It's sort of like a multitude of things. And then maybe high gas prices pushes you over the edge. And I feel like a lot of times people often leave rideshare, and they kind of leave it on a bad note. It's like, oh, I didn't have a great experience, or I got into an accident, or my expenses were adding up, right? And I feel like it would be very valuable to the companies to, partner with Stable, or to have products like this available for drivers that kind of make it easier to get back on the platform, right? Like as a driver, it's sort of like, hey, a lot of times I feel like once I'm done with it, I'm done. And I think this is a big problem that the companies, they've hired millions of drivers and kind of churned through them so quickly. I mean, there's only so many people available willing to do this type of work. So I do think at a certain point, right, it's kind of important for the companies to start thinking about retention. And, how do you think about like, hey, if we really need people to come back on, how do we make it really easy, and, insurance or, inspections or whatever it might be, to hop back on the platform and give some rides, or give it a second chance even?
Yeah, I mean, so a lot, again, insurers have so much information that I think if they worked better with some of the rideshare companies, they could make that whole onboarding process or reboarding process a lot easier, right? So maybe I still have the same vehicle as I used to have on Uber, but if I've been off long enough, I'm going to have to go through some type of recertification. If we already have that info on you, and we've, typically what we've seen is like when you start using a dash cam, you don't stop using it. You may have you may fall in and out of it. But so we probably have some real-time data on you, and it can like give a check to Uber and say, hey, like this car is ready to go. It's been inspected. The insurance is up to date. They just need to flip this switch, and then they're ready to go. And we can kind of like be that third-party verification for the platforms.
Yeah, that's such a great idea, because it's almost like, I think about like my insurance document just expired for Uber, and for a while they had the craziest glitch where if you uploaded your new insurance document, how it would be the next 6 months, right? So you would get it a month in advance, and if you uploaded your new document, it would actually flag you as an error, and you would be unable to drive, because now you're not covered for like the next 2 or 3 weeks. And I'm just like, man, how have you guys not figured this out yet? Just integrate with all these insurance companies. So I think there's some cool opportunities there. So, I'm really excited for the future of Stable. And, one of the things I love finding these opportunities that, sort of make it easier for drivers, or get back on the road, or save them money when it comes to insurance. So I'd love to tease, so we talked about the product being live in Illinois. Feel free to share any more information on that and where people can find out about Stable. And then, what's next for you and Stable? You mentioned maybe a part-time policy, fleet policy. I'm assuming other states are on the docket. So feel free to cover all that, and we'll wrap up.
Yeah, so we're going live on June 22nd. So you'll be able to go to our website, Stable INS, that's short for insurance.com. I'm sure you can throw a link up in the show notes. So check us out if you're in Illinois on those dates. If you're not, still check us out. You can sign up for our wait list. It is a brutally slow process to launch an insurance product. Unfortunately, as fast as you want to move, you deal with a lot of regulation. So our goal is to be live in 4 states in total by the end of the year. So we're trying to hit some of the bigger ones. So Illinois, Arizona, Texas, and either Tennessee or Georgia. by the end of the year. So if you're in any of those states, definitely sign up because we'll
Nice.
keep you in the know of when we're going to be live in your state. But even if you're not, there's a lot of benefits you can get just by becoming a kind of a member of our platform. So you can kind of sign up and get those driver analytics for free. You can kind of track our progress. You can give us feedback on like, hey, I know you're not in, Washington State yet, but this is problems that we have in Washington State, and we'll look at how to solve them. Every state is a little bit different when it comes to insurance regulation, so there's different features we can offer.
Yeah, that's a good point. I recently had Sunil from Spring Free EV, and we got a bunch of feedback on that episode. And one of the pieces of feedback I shared was from a driver who had been driving, all different EVs and hundreds of thousands of miles. He sent him a super detailed, basically product feedback, and I shared it, redacted his info, but shared it on social. I was like, hey, come on my podcast. My listeners will give you free feedback, so you might get a few emails from our drivers out there. So that's cool. So it sounds like other states, and then anything else you want to mention?
Yeah, I mean, we're just looking at, I think, how to connect within the communities more.
Cool.
Like I said, feedback is the number one thing that we can get. We love, even if it's just event, like if you're never going to come to us, but you just want to tell us like how bad things are. I've been dealing with that since 2015, since I launched the fleet. Even if it's just event about any of the rideshare partners, like we want to listen, we want to try and help out. But even if it's just, if you need somebody to yell to, we can do that for you as well.
That's a good idea. We'll either put your email in the show notes, or maybe we'll create a new one, vent@stableins.com, because I think people might enjoy that, knowing that there's someone out there who can empathize with all their problems. So I'm really excited to see the launch of the product in Illinois. I know we're going to help you guys promote that and get the word out, and really excited for everything that you and the team at Stable are doing. Sounds like you guys have put a lot of work into this and are now going to be marching through a few states here in this year. So we'll leave a link to stableins.com, I believe is the website, in the show notes. And if drivers in Chicago or Illinois want to go ahead and check out this product, get a quote, sounds like they'll be able to do so starting June 22nd. And we'll have to have you on again in the future to chat more insurance, Doug.
Sounds good. Thanks for having me, Harry.
All right. Take care.